Beautiful. And welcome once again, ladies and gentlemen, to another Sharewise webinar. We're very grateful to have the CEO, Martin Filz, here with CFO, Melinda Sheppard. We're going to be talking about Pureprofile today, and I'm very excited to hear about a few of their full year 2024 update with a bit of the board appointments and also the recent acquisition as well. I'm very interested in how the AI has been working in conjunction with the business as well as a few of those financial touches. So just before we get started, a bit about both of you guys. Martin, we'll start with you first. What got you started in Pureprofile to begin with?
Yeah, hi Lachlan, hi everybody, and thank you for having us. Good question. So about 20 years ago, I got involved with data and insights, and they say data is the new gold. In the last 2 years, 90% of the world's data was actually created. So this is exponential growth. And I got involved with data and insights coming from a software background at that point, and it was like I discovered chocolate. Suddenly it was like, wow, surely every organization should go out and speak to people and understand something about their market before they launch a product, whether that's a car, political policy, some chocolate, an advert, whatever. And I would hook, line and sinker. And it was something that I wholeheartedly still believe is absolutely needed by every company to an organization to make the right decisions. And so for 20 years, I worked for some of the largest organizations in the world in our space, competitors to Pureprofile. And then Pureprofile came onto my radar just during COVID. They didn't have a CEO. I reached out to the chair and said, hey, you don't have a CEO. Let's have a chat about this. Absolutely. And I saw in Pureprofile this mini version of these big global companies I'd worked for, and that we had an amazing opportunity to turn Pureprofile into a real global player. And 4 years later, we've done many of those things, and I'll share some of the facts coming up.
Absolutely, absolutely. And Melinda, we're talking backstage a bit about financials and how we pretty much both enjoy them. What got you started in the first place?
Yeah, so I joined Pureprofile just over 6 years ago, and it's been a fabulous ride since then. Effectively, what my background's actually been media. Spent most of my career in media and a couple of other industries, and the CEO of Pureprofile at the time was a former colleague I'd worked with, and I was really interested in the business. I think it was in an interesting position at the time that I was approached about it. It did have, a lot of challenges from a financial perspective, which was a bit of my background. I've done some turnaround financial roles before, and I quite enjoyed that problem-solving aspect of it. And also the other thing that attracted me to the business was just the culture, and as Martin said, the people that we had in the business. So that was really interesting to me as well. So here I am 6 years later, and the business is in a very different position. So
absolutely. Yeah. Well, just for our members and guests that have joined us, we will have a Q&A at the very end. So if you want to submit questions, we won't interrupt the presentation. We'll just get to them at the end. But I think we're going to start off with Martin with a bit of the presentation. So I'll let you take the reins.
Great. Thank you very much, Steve. Just double checking, can everybody see my slide?
Perfect.
Fantastic. So we'll do a little bit about the history of Pureprofile for those of you who don't know us, and then get into financial year 24, unaudited numbers we've just released, and what we're looking at for 25 onwards. So fundamentally, Pureprofile is firstly a growth company, and Mel will talk about our CAGR over the last few years. So we're a growth company. We're a 24-year-old company, so very established, and we're a data company. And what does that mean? We actually connect data and data from people with businesses, with organizations who are looking for answers. So that's about connecting the right audiences, the right data with the right business problem. So for example, a government in Australia might be looking to release some new policies or think about new policy direction. They want to speak to some voters who support their party, support other parties, are neutrals. And so we bring the two together, and they could be online surveys or sharing actual data. JB Hi-Fi could be looking at why is Bing Lee winning market share in refrigerators, looking at raw data about spend and who's spending in those markets. Or let's say Audi's looking to launch a new electric vehicle. So again, they want to speak to buyers of cars, buyers of electric vehicles. What would be the features they would be interested in? How are they going to get sales? As well as ad effectiveness. And really, research touches every part of our lives today. So that's what we do, connect the right audiences with the right company, the right problem they have. How do we do that? We have millions of people around the world and millions of data points from those millions of people around the world. We conducted research in over 90 countries in the last 12 months from our 13 offices. And so it's about connecting again those right people with, and we have a choice of millions of people around the world to do it. Why do we do it? Because if companies can make better decisions, we as consumers, we as people are going to have better products. We'll have better advertising. We'll have better messaging. We'll have better electric vehicles. We have better toothbrushes, whatever else has been researched. So data's at the heart, connecting businesses, business problems, opportunities with people. We've had a clear global strategy for the last 4 years. So a clear strategy for number one, grow globally. We're number one market share in Australia, and we've been that for a number of years. And when I joined, we were already in 5 countries, and it was around leaning into that. It was about actually growing that core Australian business into the international company that we have the opportunity to be. And sort of 4 years ago, less than 20% of our business came from overseas, and today that's 44% of our revenues come from non-Australian based businesses. So we're doing that. That's where the investment has been. That's where we see the growth. The second part of the strategy was automating, being cheaper, faster, higher quality. So bringing on our platform with our various solutions in our platform. We've been successful in that. So again, 4 years ago, platform was almost 0% of our revenue. Today, that's sitting at about 20% of our revenue. So being faster, being cheaper, as I said, higher quality. And then thirdly, sticking to what you know. We know data, we understand data and insights. Let's lean into that again. And actually, that's where we have 800 clients who know us, and we have a strong brand that know us for delivering high quality solutions in that space. Let's focus in on those areas. In a snapshot, we have offices today in 13 countries. So that's growing from those 5 to 13. So that bit of the strategy's worked, and we've got over 800 clients globally, over 220 staff, fantastic people that really are the heart of our whole business. We win numerous awards around the way that we work with our team, and most recently we won Inspiring Places to Work in Australia, and we came 4th out of all the Australian companies, and we were top 50 in Europe, and we were 5th in Asia as well. $48.1 million of revenue. We're NPAT profitable. There's not many microcaps that can say they're NPAT profitable, and that was a big milestone that we hit last year, and Mel will talk about that in a moment. 91% of our revenue comes from repeat clients. So again, we deliver what we say we're going to deliver, do what you say you're going to do on the tin. And as I said before, apart from our platform revenue, which is at about 20% of our revenue, $10.4 million of that 48.1 million, that's actually annuity revenue. That's repeat business for us. Again, both those measures over the past 12 months. Bit of a diagram shows how we connect audiences. We're about 20 million or so at the moment. This is aspirational to financial year 25, which we now entered into. So that's 50 million audiences around the world. We connect that. We build audiences ourselves. We do that through partners, such as in Australia, a fantastic partner in Flybys, building audiences and data points from that. And we have others around the world. We link into other partners similar to Pureprofile around the world. And then one of the latest things is termed synthetic data. artificial intelligence gives us the ability of actually building audiences without building audiences. So that's very interesting. Then on the left-hand side, we've got our clients. We're connecting those business problems. They might use our managed services. We've got over 110 people in India and the Philippines, low-cost markets where we deliver our managed service work. We've got DIY tools such as Insights Builder, audience intelligence that allows people to go directly and look at data. And then we've got other areas which are developing, such as qualitative research, AI insights, and then some direct solutions. And how do we do that? Either directly computer-to-computer, that's called APIs in our world, no human touches it, higher margin, faster delivery, or direct services, and we do that overseas with local account management. So that's a sort of diagram showing our connectivity. The journey we've been on, 2020, we did a restructure. We did a debt to equity swap to right-size the company. And we had a refresh of the executive team. I brought a number of people that I'm growing old that I know from the space to come on the journey and do something special at Pureprofile and really augment the amazing team that was already here, such as Mel and others. 20 to 23 was really then about investing in the business. So bringing in our technical debt from our technology, so ensuring that we had the latest technology, building up those audiences, those panels, and making sure we had the right people in the right places. And then last year, financial year, and now moving forward, can't believe we're already in August, it's all about accelerating that growth and offer that platform that we've got, growing the business even further. And Mel will talk about KGAR, but 4 years ago, we were a $20 million business with minus $4.8 million of losses, and now we're $48 million with 100K of profit. So we've done that growth during that period and that investment during that period whilst being operating cash flow positive, which is a real goal for Mel and I. And within Q2 of 4 years ago, we're operating cash flow positive and with a focus on being truly NPAT positive, which we now are. So we've managed all of that whilst growing the bottom line. Why do we do it? Because we live in a $130 billion market. It's a big market that unless you're in data and insights, you don't know about. But as I said earlier, every ad you see, every product you touch, the car you drive, the clothes you wear, the TV you're watching, whatever else it is, has been through some level of data and insights market research. $130 billion market. We're number one in Australia, which makes up 2% of that global market. The UK, where we said we've been for about 10 years and really growing off of that platform, is about 6 times bigger than the Australian market. And the US market, which we've trebled in size over the last 4 years, but still we're like a little pebble in the lake, is actually 35 times bigger than the Australian market. Great thing is English language, our high quality, our high delivery transfers directly to those markets, same competitors, same clients. So it's a perfect opportunity for us to do that. Right hand side, I've put that up. We're often asked about that. Artificial intelligence, everybody's talking about it. Yes, it's opportunities for us as a business, without a doubt. 3 particular areas we look at. Number one is internal efficiencies. So we've rolled out solutions such as AI translations, AI coding, AI reconciliation. Won't mean much to the listeners, but it means we're more efficient, we're faster using this latest technology. Second area is new solutions that we're rolling out to clients. I won't talk about those too many at the moment, but there's possibly new solutions coming to the market, thinking about utilizing AI. And the third one is these are all now clients. All of these AI engines, when you do a ChatGPT search or whatever it is, they've got to get their data from somewhere. Yeah. Guess what? Yeah. Proprietary first-party data sits with Pureprofile, brilliant source of data for clients. What's the prize? Number of peers I talked about, I've headed up a number of those in different regions. 150 million Australian dollars to $1 billion Australian dollars of revenue. We're just at 48.1 million, so still very small. Why? Because they've got strong US and UK businesses and some direct client solutions. So where are we? 10 years in the UK, really good platform, trebled the size of business in 4 years in the UK, same as in the US. And really the 25 for us is investment focused on that UK and having a real breakout into the UK market. And then also building out those end client solutions using some of that AI stuff. Great tailwinds. Quality is important in our space. It's all our own data, all our proprietary form data. So we've got high quality. Peer group going through lots of changes, private equity takeover, mergers, etc. Pureprofile is winning market share from all those clients, as well as great people are coming to join us, attracting great people because we really put employees first with clients. And then that rise of AI. So bringing innovation to our industry, to our thinking as well as a business, and then also to fast delivery of new solutions and new clients. 24 in a snapshot, as I said, I talked about a few years ago. Last year, we made a loss of $1.9 million. It's a true NPAT profit of $100,000 for us last year. So that's a big milestone, big important step for us, while still being top line, a growth company achieving 10% growth year over year, $48.1 million in revenue, $4.4 million in EBITDA, and we finished the year cash in bank with $5.2 million. We increased that rest of the world revenue to 43%, up from 38.5% in financial year 23. So again, that strategy, that investment that we're making is paying off. 91% of business comes from clients. They like what we do. 5 new AI solutions to keep that margin expansion going. A couple of new offices. We opened Spain and Germany, as I said earlier, taking us to 13. We won another award in the year, which was an inaugural award, being Research Partner of the Year. And we came out as #1, competing with peers and other companies. Again, so that's clients voting and endorsing we're doing the right thing for them. And then it's talked about top 50 inspiring workplace in the UK, 4th in Asia and 5th in Australia. We made our first acquisition in the last 4 years as well. So we did that, completed 1st of July. So we announced it on 27th of June. So we paid 1.25 million for a little version, smaller version of Pureprofile out of Australia. So they're, again, we're 24 years old. They're 23 years old. Smaller version of us, said around about $2.7 million of revenue, about 1 million surveys conducted across their audiences, paying only 1.25 million. Started that integration. We're well into it now. So great to see that asset being part of the Pureprofile family. First one we brought in, they use the team, 17 people are now using our systems, over 50 clients benefiting from larger operations team, larger data points, removing bottlenecks that they had, and really excited to make that a success, as it's already showing it's going to be. So onwards and upwards, first one.
Love it.
We had some board refresh. So really excited to welcome Michael Anderson as our new chair. Some of the listeners might know him from O Media in Australia. So that was pre-IPO through to IPO and running that board. So huge amount of experience and knowledge, both within our space, but equally within the client space. And then a fabulous addition, Adrian Gonzalez, joined as non-executive director, and he headed up Kantar, which is a big player in our space across Asia, phenomenally well connected, and his team had over 3,000 employees. We're blessed to have him as part of our business, and both of them in conjunction with Mark Healy, who took Brandwatch as chair, company from zero revenue in a garage in Brighton to a recent sale, $455 million to a US company called Cision. So we're amazing board now that's really challenging us, giving us ideas, giving us opportunities, opening their Rolodex. So lots of stuff going on. But how exciting is that? And I've got a great graph showing quarterly revenue, Lachlan. Our share price isn't doing that. So we're having particular focus now on the share price. We know microcap's a little bit unloved. We're not going to use that as an excuse. And it's getting out there and really now having a focus on new funds, new shareholders, joining webinars such as yours.
Yeah, potential roadshows maybe down the track might be the idea as well, you know.
Exactly right, because it is a great story. It is a great business. It's an established business. As I said, 24 years, 800 clients, 230 people, NPAT positive. Why wouldn't you buy shares?
Absolutely.
But shares can go up and down. I think I have to say that. So with that, I'm sure you've all had enough of me. I am now going to hand over to Mel.
Thank you so much, Martin. So just a reminder that all the financials that we're sharing today are preliminary and they're unaudited. We'll be putting out our annual report at the end of August, so you'll see our audited results then. And the numbers also are our continuing business only. We divested of our media business or closed it down last financial year. So the numbers that we're sharing with you reflect the continuing like-for-like business. So as Martin said, the key highlight really of FY24 was our first maiden profit of $100,000 compared to the loss that we had in the prior year of 1.9 million. I think actually in the first year that I started, we actually made a $25 million loss. So we've come a long way. And as I said, it's been a really fulfilling, amazing journey for us. We had some fantastic top line growth, as Martin said, also $48.1 million worth of revenue for the year, which was 10% up. And really where we saw that growth throughout the year was really outside of Australia. So as Martin talked about, our growth strategy has really been about growing outside of Australia, taking what we do really well in Australia and replicating it in other regions. So that investment that we've made outside of Australia in people, in panels, in technology, etc., has really paid off for us. And that's why we see this amazing growth outside of Australia. We had EBITDA of 4.4 million. It was down on the prior comparable period, but from a like-for-like perspective, it was actually up 8%. So we had a change to our incentive program where we moved from share-based payments to a cash STI. And so that had an impact on EBITDA because the equity is booked as a share-based payment. We had a reported cash balance of 5.2 million, which is actually $1 million up on where we were at the half year. So we had a really strong cash flow in the second half of the year. And that's driven off the back of that really strong revenue growth that you saw throughout the year. And our platform revenue, which is really where we've got the fastest growth, revenue stream was 88% up. So that's pretty consistent with what we've seen over the last couple of years to $9 million. If you go to the next slide, please, Martin. So this gives you, if you're not that familiar with the business, it gives you a real snapshot of the sort of the trends that you've seen over the last couple of years with the business. And we've got the CAGR here for each of the different revenue streams. So ANZ business, which is a much more mature business, as where Martin said, we're number one in Australia. It's actually had 16% 3-year growth versus the rest of the world, which is really where you're seeing that growth strategy being executed, and that's 38% over 3 years, and the platform revenue 102%, and then our EBITDA is actually growing 14%. So whilst it was down from a statutory sort of perspective on 24, over the last 3 years, you've seen it grow from 3 million to 4.4. Go on to the next slide, please. So just how do we go for the quarter? For those of you that have been following us, we have a little bit of different seasonality across quarters, but really pleasingly, our Q4 was a record quarter for us at 13.1 million, which we were absolutely thrilled with. Our teams worked incredibly hard to finish out the financial year in what is a tough market around sort of globally, in particular Australia. So we had $13.1 million worth of revenue, which was 18% up on the prior comparable quarter, which is amazing. Q3 was 6%. So it gives you a sort of an idea of the quantum uplift in the final quarter of the year. We saw a really strong recovery in our ANZ business, and the rest of the world was up 38%. And that was really bolstered by what we saw was significant growth in our US business, our UK and our India business. And pleasingly, our EBITDA was up 13%, and that's without taking into account the like-for-like STI sort of numbers around that thing, so around the quarter. So fantastic result there. And you can see also the platform revenue of 2.5, which is 59% up. If you just go on to the next slide, which is just, again, the trends from a quarter perspective. So you can see here, again, very similar to what I just showed you for the full year. Yeah, a really strong result overall across the business. And you can really see there on this chart, as well as the rest of the world growth from where we were 4 years ago, which is just amazing from that perspective. And then just a final slide. Just really our key priorities for 25. So when we come to our AGM in October, November, we'll be talking about our FY25 financial guidance that we'll be communicating to the market through that period. But really our focus for 25 is to continue on that international expansion. So really continuing to grow out our UK business, where we see, as Martin said, huge opportunities, a really big market there. Supporting our new offices that we opened up in the last 6 months in Spain and Germany, continuing to build on the momentum we've got in Australia. Again, market leaders, we want to keep making sure that we're growing that part of the business and setting that business up for beyond 25. We've done a lot of work already integrating our iLink business, making sure that the team there have every opportunity to grow their revenue and pick up operational efficiencies by utilising a lot of our systems, which is, part of the whole rationale behind it. Continuing to work with more AI and technology partners and offer more data points to businesses for their models. We'll continue focusing on building out new AI solutions, which will make us more efficient, like a lot of organisations, and enhancing, importantly, what we can do for our clients. That's really important for us. It's one of our core differentiators is, our customer service. We obviously want to make sure that we maintain that NPAT profitability and grow from a bottom line perspective. Now we are profitable. So we'll continue to make investment in the business, and we'll be making sure that, those investments, as the ones that we've been making over the last 4 years, every year we've made new investments, which has really allowed us to continue to grow at that top line, and then setting ourselves up for success beyond this financial year. So that's really our key priorities. And then I think I'll just hand back to Martin for just a bit of a summary.
So thanks, Mel. And that's really, the summary. So first year profitable and true NPAT profitability, revenue up 10%. So still looking at a growth company, amazing Q4 that gives us momentum carrying on to this year. Focus on rest of the world up 23%. That making sure good stewardship under Mel of our cash and our first successful first acquisition. And yes, it's been very successful. So
absolutely.
Summary of us?
Absolutely. Well, we might take a few questions. So members and guests, if you want to start submitting a few questions, we'll take the opportunity to answer those now. I've got one at the moment. It definitely sounds like your clientele, when you do get them on board, they are working with you guys. They're satisfied. 91% retention rate for your clientele is incredible. Definitely, like one of the questions that came through as well is there any survey partners for Qantas Frequent Flyer program, or are you exclusive to the flybys? So I think with regards to that and that in mind, what is the limitations of partnering up with other companies overseas, and more or less how you're protecting data per customer? That's all.
Yeah, a couple of questions within that. So Qantas do offer something similar, and they have a partnership with one of the competitors, and I actually signed that deal when I headed up that competitor. So they've been running that for a few years. So I do know that deal. For us, and they don't run it as well as we run our ones. But for us, we have a really good mix in Australia. We're happy with our mix in Australia. We've got Flybuys, really big consumer base. Obviously, it's number one consumer base with their audiences. We then augment that with some other partnerships that we have. A partnership Student Edge brings us younger audiences. Partnership with Raise brings us more affluent, high net worth individuals. Shopback brings us a particular demographic around females and a certain age group. So we've got a good mix. We're continually looking, but that works really nicely in Australia. We have a very, very large audience for us to be able to work with clients. We've got a couple in New Zealand as well, a couple more, and that build out in New Zealand. We just in Asia, we a couple of years ago now signed a deal with a company called the Asian Parent, so that gives us presence, and we're seen as an expert around research and data and insights of parents with pregnancy up to, I think it's age 5. And then in the UK, we literally about 3 months ago signed our first UK audience builder partner, company called Sprive, which is alternative mortgage financial institution type business, and that's going really well. Our absolute focus on the moment is UK and US partnerships. And that, why do we do that? Because that gives us an immediate presence, gives us immediate data points, and it means that we can monetize those directly with our clients and with new clients. Whereas if we build up our own audiences, which we do as well around the world, but we're putting our hand in our pocket to recruit people to come to an audience or data points, it takes a longer period of time to get to the scale that you switch it on with the flybys, and within a month or so you've got a really large audience, and they're an amazing partnership. So UK, US focus with what we call those audience builder partners.
Absolutely, absolutely. And I imagine we're hopefully going to be having a lot of meetings over in the UK and US to increase that as well along the way. For yourself, Melinda, what's been the biggest hurdle that we've gotten over the last 4 years? Obviously, it looks like overall the company's revenue has just been going from peak to peak to peak. But from another accounting point of standpoint, what's been the biggest hurdle that we've overcome and recovered from?
Look, I think the key turning point really was the restructure and the recapitalisation at the end of 2020. I think that really opened up, I think a lot of confidence with the business. I mean, we even, you talked about clients, and we've got really high client retention. Well, it's the same clients were back then, but I think there was always a bit of a concern that the company might not survive. So, there was always reluctance to give us some of those longer multi-year contracts that, when Martin talked about the $10.8 million worth of annuity revenue, he's talking about multi-year contracts that many large businesses will do over a period of time. So I think that was a real turning point. Martin came in just actually in August that year. So he came in to actually help us get that debt restructure and recap over the line, which obviously was really successful. And that really, I think, gave all our people that had been with the business for a long time and working really hard a lot of confidence, and our clients as well. And so I think that was probably the biggest hurdle, from that perspective. But I mean, I think, we've always had great people. When Martin came in, we also then, really focused on a really clear growth strategy.
Yep.
And having that clear growth strategy in place really allowed the business to focus. We probably weren't very focused before he came in. He sort of looked at what we were doing really well and what we weren't doing well. And, we then sort of, pivoted into the core part of the business, which was always the bread and butter and the gold, as Martin sort of talked about. So really that as well, being very focused, and that's where you've seen the results. It's just doing what you're doing well, and making sure that we look after our clients every day as well, making sure that they're happy to come back and give us more business. So I think those two things, and and also a lot of the talent that he brought in as well, I think that's really had a really positive impact on the business, bringing a lot of really great experience into the business. And that team that he's put in place is really the team that will help continue us on this growth strategy.
Absolutely.
The only thing I would just add to that, Mel, is shareholder trust as well. We've again, from day one, we've been consistent in our reporting, consistent in our communication. They've seen continual growth, top line and bottom line. That's been a real focus for us, and building up that trust with shareholders. And we've got some amazing funds in the business, and as a microcap, and they've been funds with us since maybe before 4 years ago, but certainly that confidence to reinvest and keep on that journey with us. And so that's been an also turnaround for us as a business.
Absolutely. So for those new investors or investors that are currently shareholders at the moment, what's the message that you want to give to them for the next 6 to 12 months about the business?
Well, as Mel said, we'll give proper guidance traditionally at our AGM, so end of October, beginning of November. But the reality is expect more of the same. So more top-line growth. We're a growth company. We do that within our existing funds investment that we have. So seeing that margin expansion, or at least dollar expansion at the EBITDA level. We're now NPAT profitable, so you have a rod for your own back on that, but let's see, we're going to see that continually to grow. And all of that, where does that come from? That comes from us continuing to grow internationally and seeing that international revenue tip over the 50% mark. So we're truly an international business. So it's more of the same from Pureprofile in a world that data is becoming more and more valuable and the insights more and more needed.
Absolutely. No words are being said truer. Well, ladies and gentlemen, we might wrap things up there. I have to thank Martin and Melinda for joining me today. It's been an absolute pleasure to speaking to both of you. I'm very excited to hear about your guidance later in October. I think we'll be all on the edge of our seats waiting to hear what you have to say, and looking forward to those results of where our targets are going to be. So ladies and gentlemen, if you do have any further questions, we'll get you guys to submit an email through the as we have on the presentation. You can send them through to Martin or Melinda, and I'm sure they're happy to answer any further questions. But apart from that, we might wrap it up. If you didn't see the full live webinar, that's okay. We do have a recording and they'll be up on YouTube as soon as possible. So thank you very much, guys, for joining me today, and we'll wrap things up there. Thank you.
Thank you, Lachlan. Cheers.
Yeah, thanks for having us.